Hey guys, Joe Frank here, market analyst for YouTrading, and in today's video, we're going to be taking a quick look across markets, talking about some of the themes that are in play, some of the recent news, and we're going to be having a look at the calendar and talking about some of the risk events that are coming up later this week. So let's jump straight into the charts. Probably one of the most interesting assets to talk about this morning. Is the dollar index. You can see last Friday had this little push higher to multi-week highs, its highest level in a little over a month, kind of broken out of, well, I mean, it's still kind of within its recent range, really, actually, like still below the early April highs. But it's definitely pushed up a little bit from these recent lows. A lot of people had been expecting it to continue moving lower, um, but seems to be confounding those expectations for now. Um, in terms of why the dollar index has been pushing higher, I mean, I wouldn't read too much into this kind of move, to be honest, because we're still close to recent lows. But we've got some people talking about last week's inflation expectations component of the University of Michigan Consumer Sentiment Report, which, well, this is the 1 year one, which actually dropped to 4.5 from 4.6%. But the longer term one of 5 years actually rose, I think, to its highest level since 2011. Now, the Fed watches closely this inflation expectations of the consumer, because if the consumer has inflation expectations that are very high, that can actually become a self-fulfilling prophecy. Now, that's a concern for the Fed. Obviously, if you've got the 5 year inflation expectations component rising to its highest since 2011, it sort of reinforces fears that inflation may remain sticky. Now, market-based measures of inflation expectations, let me just show you here. You can see this chart down here in the bottom corner. This is the US 10-year break-even inflation expectations. It's the difference between the 10-year nominal yield and the 10-year real yield. And that's still pretty low, 2.2%. So markets are telling us that inflation in the long term is going to be okay. But, still from the Fed, it's a little bit worrying. And we did have some Fed speakers speaking over the weekend. And generally, the theme seems to be that they continue to push back against the idea of interest rate cuts later this year. So that could be lifting the dollar a little bit right now. Although, on the other hand, let's look at the data we've just had this morning. Very, very ugly Empire State Manufacturing Index survey data for May that just got released this morning. I mean, look at this index. It's been pretty ugly now for a couple of months, reinforcing fears that the US could be heading into a recession potentially within a couple of months. Now, that will be a big theme for the rest of this week. We've got retail sales data coming out as well. I mean, you can see these headline numbers month over month, 0.5% growth for the core, 0.8% for the headline. So we're expecting decent numbers. But if we do get a downside surprise in these retail sales data, that could further amplify these recession fears. Philly Fed Manufacturing Index will also be in focus. It's another regional index, just like the Empire State one. Got home data coming out throughout the week. And a smattering more of Fed speakers, like we've got Fed Chair Powell on Friday. That'll be the most important Fed speaker, but we've got a few others this week as well. He's likely to continue pushing back against the idea of rate cuts later this year, as have other Fed speakers recently. But if this data continues to show that the US is probably heading to a recession, this dollar rally is probably going to be capped. Because at the moment, you've got markets betting on, around 75, 70 basis points worth of rate cuts by the end of the year from the Fed. A lot of people are skeptical about that. Obviously, the Fed's pushing back against that because of sticky inflation. But if the US does head into a recession, bank crisis gets worse, all that kind of stuff, then, that could keep the Dixie upside capped for now. But let's talk about a few other asset classes. You've got the S&P 500 magnetized to the 21-day moving average, still well within recent ranges. I mean, within the end of last week's ranges, but then more broadly, well within recent multi-week ranges. You got the Nasdaq close to recent highs within recent ranges. You got gold within recent ranges. Pretty boring, really, isn't it? But you know, gold hanging out close to recent highs. Let's have a look at yields here. Still range bound, but we've found this nice lower range around 4%, about 1% lower than where we were in early March before the bank crisis concerns arrived. Let's get this 10-year up. 10-year, same story. Oil recovered from recent lows, but still way down from those post-surprise OPEC output cut highs. I mean, the fact that we found such strong resistance at the 200-day moving average, and also I think this was a long-term resistance level going back actually a little way. That's a bearish long-term technical sign, you'd have to think, for oil, which has certainly been the case so far. Regarding what else could we look at? Bitcoin, it's pulled back a little bit, but finding some support at the moment. You know, if gold keeps trending higher, yields keep trending lower, dollar keeps trending lower, or at least if all those other asset classes remain range bound, then you would expect Bitcoin to hold in the upper 20,000s, 30,000 kind of area. Maybe not quite, but sort of close-ish to 30,000. But yeah, in terms of what else we got this week, we've talked about the US. We've also got some interesting data points coming out of some other G10 countries. If you're trading those pairs, like the Aussie, you've got RBA meeting minutes, Australia wage price index data. Out of Canada, you've got CPI, you've got retail sales on Friday. You've also got the BOC governor speaking as well. Oh, I missed the Aussie jobs data as well for the Aussie traders. And then in the UK jobs data on Tuesday. Where's the UK retail sales data? Oh, it must be next week. But UK Governor Bailey speaking as well. So a few things to be keeping an eye on if you're a G10 trader. But yes, for me, the main thing this week, I'm going to be watching these US data prints that are coming out and monitoring this Fed speak. But yeah, guys, hope you all found this video informative. Hope you all enjoyed it, and I will see you all in the next one.